I'll tell my wife. They're found objects.
Oh, nice.
Whereabouts are you, Teresa?
I'm just outside DC. I'm in the suburbs.
Okay.
In Maryland, yeah.
I'm in Marin County, just north of San Francisco.
Nice.
Yeah.
Very nice. I'm a little nervous, sorry.
Oh, don't be.
Yeah, there's
You've
nothing to it.
never been in a room with me. You'll never be nervous. You'll just have fun, It's not meant to be nervous. It's just like sitting at home, drinking a cup of coffee, and people asking 1,001 questions. The only difference is it's me asking the questions. All right, let's get started, everyone. We're just behind the dot. Good afternoon, everyone, and welcome once again to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and once again, we are excited to continue the journey of education for everyone, specifically because now we are truly on a countdown. 12 days, that's right, 12 days. Mark it on your calendar. March the 15th, it goes live. Regulation CF to 5 million, Regulation A to 75 million. So much to talk about, so much to learn. And as you know, our format is very simple. We don't have PowerPoint presentations or anything like that. We're here to have a discussion, to learn and learn from the leaders that are doing this day in and day out. And today I am joined by two guests that you've seen before, but nevertheless, I want them to introduce themselves so you get to know them. And then we're going to jump into our great topic. Ladies first.
Okay. Hi, Oscar. Hi, John. I'm happy to be here. My name is Teresa Hyatt. I'm a counsel with CrowdCheck and CrowdCheck Law.
And I'm John Evershed. I'm the CEO of Chonky, which is actually a new name that we haven't even really technically rolled out just yet. We were previously known as Fat Cat Club, and we're a site focused on entertainment projects, raising financing for entertainment projects with a rev share on the back end. We'll be launching here very shortly with several different video games, movies, TV series, that kind of thing. So we focus on helping people raise funding for their entertainment projects.
Wow, that's great. So did I hear that? So I want to get the name, Chonky.
Chonky.
Chonky. Gotta get
okay,
that. Chonky.
So there's method to our madness, though. It's a meme on the internet that actually means fat cat. So if you look up Chonky on the internet, it comes up with a whole bunch of pictures of literally fat kittens, fat cats.
I've seen that.
Yeah, have you seen it already? Okay, that's great.
I own 2 fat cats, so I know exactly what you're talking about.
It's a term of endearment.
I'm already, I think I'm there. I just have to get there, right? So
yeah.
Chonky it is.
You have to remember a little bit who we're targeting, right? Which is kind of the Comic-Con crowd. We're not so much focused on, high net worth kind of types or institutional investment. A lot of this is going to be fan investing around entertainment projects. So think of it like the Comic-Con crowd, if you will.
No, I'm familiar. Just I always say, don't be surprised. I mean, it is one thing that we've learned in this space. The less we assume what may or may not happen, it's better. And only statistically.
Well, we got a lot of learning to do. I mean, we're pre-launch, obviously. So
yeah, of course. Listen, this goes without saying. It's one of the things that we like to share with everyone is the things are changing. There is definitely something new afoot, and there's definitely a new investor. But we're going to talk about that. So this afternoon's topic is going to be fun because now we are getting ready. You've got to start preparing. And, what do you need for a regulation CF? It may sound simple. It probably is. We don't want to oversimplify it. You often hear people say, oh, it's just really simple. Fill out a Form C and voila, you're ready to go. Today, we're going to have a discussion with both from the inside of the law firm and then, of course, a up and coming platform who will have its own requirements to follow to bring in opportunities. So for those listening in, this is really a way for you to start understanding this process. So Teresa, I'm going to, obviously start with the lawyers. Well, at least I hope it does. It should. And I know that CrowdCheck and your firm has been integral to it. So in Regulation CF, in order for a company to proceed, it needs to engage to provide some filings. So if you can walk us through that, and then I'm going to jump into you, John, as to how that fits in with what the lawyer's doing. Please.
Okay. Well, Oscar, you said something that was right on key, which was we got to get prepared. You got to get ready. Although if you were aiming for March 15th and you're just now starting, you're already too late. So this is quite a process. There are lots of requirements. I think people are often surprised. They think crowdfunding is kind of like, kickstarting, where you get out there and you just kind of throw something up on the web and see what happens. And there is a lot of preparation that goes into crowdfunding. My first thought when talking to clients is know what you want to do. You really need to know what you're selling before you can really make a lot of other decisions. What do you envision? Are you thinking of offering common stock? Are you thinking of offering debt? What kinds of things do you want to sell? Because you need to know that in order to know if you have, say, for example, the correct corporate form. If you are an LLC and you want to sell common stock, you've got a problem. You're going to have to change your corporate form. You also might want to talk to a lawyer about whether or not you're in the correct state. Some states are more advantageous than other states, depending upon what your plan is. So I think thinking ahead, you're not going to solve every problem that comes up. Things come up as you go along the way. I like to liken this as the classic pulling the loose thread on a sweater. You don't know if you're going to just have a sleeve left or a big pile of yarn on the floor. But that would be my first advice, is to think about where you want to land. And then you can start putting together a roadmap.
Interesting. Once again, I'm never surprised by this. It's just part of the learning journey. Getting more information that people don't often think about. And John, obviously, companies coming to you. Where is the starting point from them now that you take it on from where Teresa started?
Yeah, I guess a little bit to Teresa's point, a clear, compelling idea. I mean, we probably have looked at, I would say, upwards of maybe, 75 various projects of various kinds to evaluate them for whether we think they have what it takes to, actually work as a crowd raise on our platform. And we have 3 at the moment. So there's a pretty heavy just vetting process that we go through from we're asking for projections on how this project will perform. We're looking at costs. We're looking at the maturity of the team. Have they done it before? Do they have a pre-existing social media footprint already that they can speak to with their project? And really, just the soundness of the team more than anything. Like, is this a quality group of people that have worked together in the past? So we look at all those things. There's some other technical things that I'm sure Teresa could go through that are requirements that they have to go through. But just from a soft standpoint for us, frankly, we're more focused on those things and maybe the technical requirements, because the technical requirements, it's not a hurdle like you have to do if you're doing a fundraise in the classic sense. So it is simpler. But there are a lot of things that you have to do, and I'm sure Teresa can get into that in some detail. But for us, really, it's more about the compellingness of the offer itself to evaluate whether we think it's got what it takes to actually work on the platform.
Interesting. I'd like to interject here real quickly, Oscar. Something that I think is also helpful is one of the new rules, what they call generic testing the waters. So this is something after March 15th, a company can go out and even before they have picked an exemption on which to rely, if you're going to do a regulation crowdfunding offering or a private placement, say, for example, pursuant to Regulation D, or maybe have bigger sites than Target and looking at a Regulation A offering, you can go out and test the waters and see if there is a market. There are some requirements. Obviously, the anti-fraud rule still applies, so don't go out and say, we have all this inventory or we have all these sales, when you're really just somebody in the garage with a really great idea that hasn't started anything. So you want to be careful of that. And there are certain legend requirements that you would have to have, such as saying, as an issuer, you're considering having an exempt offering, but you haven't determined which exemption you want to rely on yet, that no money is being solicited or will be accepted. There are a number of these kinds of legends that would protect you. Now, here's the thing. There's always kind of a catch. So if you start an offering within 30 days, these types of testing the waters materials would end up being filed and included. But it is a way that issuers can get out there, or potential issuers, and decide whether or not there's even an interest in their idea.
Yeah, I'm not a big fan of testing the waters. I think it's it's like putting half your foot in something and jockeying around. I understand how people say that you test it. We've obviously seen the failure rates on Reg A. So meaning you go out and test it and then you decide to file. So people think that, ooh, magically I'm going to get approved in 30 days. So it could be 60, 90, 120 days. And all of a sudden, all that work you did 4 or 5 months ago is gone. Because so I understand it. I think it's good that they have the opportunity to do so. I think that's good. But I'm not, if you're in, you're in. I don't think, because I think the dialogue needs to change now, that crowdfunding is not the last resort of money. That's why people like testing of the waters. This is my one part of RegCF or Reg A, anyone, is that it's just like any other regulation. It's just the way it's approached and the way who you're targeting to is different. But it's still a regulation to raise money. Money's money. Just because it took 100 people to give you $1 million versus one, it's still money. When you go to the bank, it's $1 million. But I've heard this, and it is good that it's changing, is that regulation CF or any regulation has been seen, well, if you can't get VC money, you can't get that money, you can't get that money. This is the first money, right? This should be an option like equal to all others. So that was my comment on testing the waters, but I could go on because I do have some ideas in my head all the time, right?
If I could offer something though, we were thinking of potentially launching under that basis, the testing our projects, just to kind of allow us to build some momentum before we switch on, if that makes sense. So I think from that standpoint, that's just the very first tranche of projects that we would arguably post that we would do this with before we switch on investment. Should we maybe back up a little bit though, and just sort of define the most basic parameters of
I was just going to get to that. I mean, the key element that both of you came first, which is important, is identifying the opportunity you have. Do you have a business to take and what you want to be able to do with it? And the key here, again, just to put in the back of their mind, what do you need to do a RegCF offering? Because there are 5 elements that you need. 5, right? So you need the opportunity. Sorry? Oh, yeah. 5 is the headings. 5 is the headings. Okay, you want it. So here we go. We go into the legals. So the legals is your firm. I mean, I work with Jamie, Sarah, Andrew, yourself, Teresa as well. So you have diligently created what I'd call a very profound, regulation CF information document request. So I'm not going to oversimplify it, but I'm just doing as we're speaking right now, and this is a 26-page document even before you start filling it in. So I know my Reg A is at 78, just so you know. So
I have mine right here, and it's about maybe 10.
But you get
I feel insufficient.
The disclosure rule 201, that spells out all of the disclosure requirements for CF, that goes up to, after March 15th, it'll be double B. So I think the last time I checked, 26 letters in the alphabet, so now there are 28. So,
Yes.
and that doesn't even count all the sub rules in there and the notes to the rules. So what exactly are you looking for?
No, but what I'm just saying is that within once you've identified the opportunity, to John's point, again, we want to get to a RegCF. So it's not
Right.
whether what you can do with a regulation, there's a legal component. There's the Form C that needs to be done. But your firm, and like any other law firm, you collect an abundance of information that needs to be, walk us through those data points that the company needs to have to be prepared.
Okay. So the first thing is, I mentioned before, are you in the right corporate form? What are you planning to issue? Because, let's face it, the Form C is all about your company. We got to be able to describe your company and what you do. We have to be able to describe your corporate form. We need to be able to describe what you're selling and how that's going to impact people who purchase it. So that's an important piece that can't be ignored. And other pieces, a lot of the information we collect is because your financials are the backbone of the whole thing. So you've got to have your financial statements, depending upon where you are in the range of offering amount, that's going to vary. And a lot of the other documents are for due diligence purposes. A lot of companies like to go through that because it is an excellent exercise in getting your ducks in a row, making sure your cap table is in order, making sure your meeting minutes are organized and are complete. Has your board been functioning in accordance with your bylaws? These are all crucial elements, I think, for any company that's looking to go sell some securities to the public. It's an important stepping stone because hopefully you will take those proceeds from your offering, you're going to grow, and you'll be able to do next time a bigger round, another offering, and you need to have your fundamentals in place. That's why that's such a comprehensive list.
And on the financials, I'm just going to touch, because you brought it up, different levels. So when you say different levels, just for the audience, what you're saying here is, depending on how much money I want to raise,
right,
it will determine the type of financials that I need to provide. Does that mean I will need audited financial statements, or it will always be notice to reader or prepared by an accountant?
Okay, so if you're going to raise $535,000 or more, right now the limit is $1,070,000. It's going to go up to $5 million, as you know, March 15th. The first time you rely on Regulation CF, you can have reviewed financials. But after that, you would need audited financials. And here's another thing I like to point out to clients: make sure you have your stakeholders on board and are keeping them informed, because as a private company, you may already have private investors. You may already have loans or credit facilities that have certain, what do you call it? When they trigger, I'm going blank, debt ratios and things like that. There may be certain things that you have to keep at a certain level in your company. When you have your financials reviewed, they really change drastically. And those can look very different from the financial statements of a private company that has not been reviewed. So it's important to keep people informed who have a very significant interest in how you look on paper. And then just a word of caution: when you get audited, even the reviewed financials to the audited is another big change. You're going to have to expense your stock, your stock that you use as compensation. There are things that are going to happen that are going to make them look different. It's going to impact things.
I should maybe, if it's okay, Oscar, we're project financing with a rev share on the back end, so we're not issuing stock per se in companies, right? For our model. And so I believe that what we need is simply GAAP compliant financial reporting on the company. It needs to be US based, which is important. And you can now, as of these new regulations, again, Teresa can chime in here, but you can form an SPV I know that Oscar has some problems with that from my conversations with him. But from an entertainment standpoint, that's a very, very classic model for a movie, for example, is that you create an SPV around the specific project and all inflows and outflows happen with that, entity. But maybe if you could sort of, I guess I'd like both you guys to sort of chime in on what all that means from your different viewpoints.
Yeah, I'll chime in first. So as far as whatever you decide, it doesn't change what the regulatory side, and I'll give you, Teresa will echo it, but from a company point of view, you still got to follow Form C, whether it's revenue share or not. That doesn't change for them. Right. How you proceed with it is different. So that needs to be
one thing though, Oscar, it's, to be clear with everybody, Form C is a filing. It's not reviewed by anyone per se, right? It's simply a filing, but you have to adhere to all the regulations about the filing.
That's true.
It's not like a checkoff
True
point.
to a point.
Yeah.
It's true to a point. The SEC does not make a habit of reviewing Form CFs. However, that doesn't mean they wouldn't.
Exactly. Thank you.
And,
yeah.
And especially if you're going to do subsequent rounds, if you're going to file, let's say you do your CF offering, it's a success, and you decide you want to go to the next round and do a Regulation A, which those are reviewed, don't think the staff isn't going to go back to your Form C and make sure that what you've said in the Form C is consistent with what's in your Form 1A. Don't think they're not going to go back and, they have Google like anybody else. Don't think they're not going to go out there and see what you've been doing on the web or what videos are out there. Do you have the appropriate legends? And they're going to look at the timing. There's filing that Form C is a significant event. Right now, you can't have any advertising or anything out there about your offering before the Form C is filed. Like we were talking about the testing the waters rules, that's going to change, but they're still going to want to go look and make sure you've got the appropriate legends and that you've been filing everything the way you need to. And have you been keeping up with your ongoing reporting obligations? So sorry, jumped in. Sorry.
No, you know what? Thank you for saying that, because too often, sorry, John, I'll let you come in, but too often I hear companies, oh yeah, I'll just file the Form C. No, nobody at the SEC is looking at it. I don't want everybody to think that the SEC collects data. They are the best at it. They are the very best in the world. And that's why they are the ones that can enforce it like nobody else. And so, and if you're going to do further funding down the road, they're going to tie all this together. They're not like other regulators where they may not see it. Their systems, yeah, I agree with you on this one, Teresa. It needs to be treated, and you need to follow the guidelines of it, and making sure that regardless of what funding portal you go to, which by the way, the funding portal, John, is one of the 5 elements that you need to do in order to prepare for your offering, because not only do you need to file the Form C and all the requirements with it, you need to select the portal, because the portal could say, you know what, that's great, but we need additional. And that is already happening. We see that with Republican, with their real estate. But please, John, I didn't mean to cut you off earlier.
No, I don't recall where I was, what place. We were talking about the Form C, right? Like that you have to obviously file this Form C, and then there's these ongoing obligations that you have to be ready for that I think Oscar touched on, which is you've got like quarterly reporting, or is it quarterly reporting once you go to market? Is kind of, I think the standard is not well, here, I'll just literally read it. I have like, your obligations are that you have to do progress updates during the raise. And there's specific points at which you have to do it, where an issuer can, it says here that, an issuer must provide an update on its progress toward meeting the target offering within 5 business days after reaching 50% of the target amount and 100% of the target amount. And then you have annual reports that you have to file as well. So there's these ongoing kind of obligations that you should be aware of that you're signing up for when you sign up for one of these raises.
Well, the updates, what's really cool is because you're doing this at a registered funding portal, the funding portal has already built that mechanism already built in.
Yeah.
Unfortunately, this is where CrowdCheck and I truly agree on one end. We agree on a lot of things, but this is one that we agree the most, is that as soon as they leave the funding portal, they feel like they don't need to, and we don't enforce it enough. And now that the regulators are increasing this to 5 million, many out there feel that the regulators will be more enforceable, is that most RegCF companies do not file their Form CA, which is their annual filing they need to do. So the updates, they're doing it not because they're doing it, the platforms are doing it for them. They just have to submit it. So the platforms are being proactive because they have complete visibility to it. Yeah, you hit 50% mark, trigger, boom.
Yeah.
So now we just have to work on the annuals. So, but you're right. To your point, there's certain regulatory obligations, the Form C being one, the financials inside of it. Teresa brought up an interesting point that I didn't even know before. So thank you for that. Your first time you do an offering, it's a review. But the second time you want to use it, it's now an audit. So you really need to think about your strategy on how much money you're going to ask for, knowing that you're going to ask for it later, right?
Yeah.
If you're going to go for 500,000 now, go for $1 million.
Yeah.
Right.
No, and we've been advising issuers on our platform to oftentimes build in money for marketing of the raise, marketing for the actual product itself, your ongoing obligations for legal and accounting. So I think you just, as a matter of course, build that into your raise is the best guidance I can give to people, because oftentimes we're working with smaller mom and pop companies, and they don't have a lot of infrastructure, and these things are all meaningful, like these kinds of accounting and legal. I also want to be a little careful though, because I sort of feel like we're sending the signal like this is a big hairball and it's impossible, and don't even think about it. It's still, I think, obviously superior to a lot of other ways of raising money, and your legal and accounting, although it's there and it's real, it's not insurmountable. It's manageable.
No. I don't. You know what? I'm not sugarcoating it anymore. Sorry, as an entrepreneur,
I beg your pardon? Sorry?
I'm not sugarcoating it anymore.
Yes. Yeah.
Meaning, I know the dangers now of telling people, "Oh, don't worry about it. It's really simple."
Mm-hmm.
And so, I taught a class, an entrepreneur class, just getting off a little bit, and they told me, Oscar, don't go into too much in depth because they just want to hear the high level. And I said, so when do you want them to learn? Well, when they graduate. I go, do you know what happens when they graduate? That's when they make mistakes. So isn't it better to teach them now? So part of this is saying, look, we're explaining what it all is. Yes, it's detailed. And if you have a right team working with you, it can be very efficient because they've done it before. This is not where we were 5-6 years ago, where it was, now it's cookie cutter. The platforms help you with it. Look at how many deals are out there. What, 1,100 companies raised money last year, and this year we're anticipating over 2,000 or more. So what that tells you is that but it doesn't diminish the fact that you still need to prepare. You still need to come ready with certain elements. Otherwise, even the simplest things can't be done for you. I mean, Teresa, what can you do with me? I want to raise $1 million. Right? Great. That's fantastic. We want to help you. Okay, so what legal structure? What does that mean? Oh boy, right? So this is it. We are getting pods out there, accelerator programs and stuff like that. But this is important for everyone to know, because if everyone appreciates it and everybody embraces it, all that comes with it, it really is the most cost-efficient way of raising capital. I am the opposite of what others believe, that this is actually expensive. If you've never raised money before, this is cost effective. Dollar for dollar, it is. Because you get to and anybody can put money in. The other ones here.
There's some macro trends that I think are going our way in terms of consumer acceptance of, using their phone to make investments. I mean, literally, there's been this whole COVID era has kind of, I think, opened people's minds to, oh, wait a sec, all I have to do is sign up for this account and I can invest in stocks. It's that easy, right? I'd like to get our business to a place where it's that simple for investors. Again, I'm thinking like lots of smaller investors for our entertainment projects on the platform. So I do think that there's some overall trends that are really going our way in terms of just consumer behavior, I guess, about investments.
Sorry, Teresa, you were going to add something there.
I know. I'm trying to remember what it was. I thought that was an interesting.
What's going on with you guys? It's not Friday today. It's not Friday. It's only
but it is
Wednesday.
4:30, and it's 4:30 where I am. Actually, it's 5.
Yeah, it's 5. It's the same time for me. It's only John that's enjoying the luxury of the beaches where he's at. So we did this. We're trying different times to see how it works. Well, if it comes to you, just ping me. Don't worry. Just come on in and have a discussion. This is listen, guys.
Oh, I remember now.
Please.
I remember now what I was going to say. So yes, it's more expensive than I think what people would like to spend or maybe had anticipated. But I mean, let's also look at the fact that one of the benefits of this process, and when you go through it correctly, is the protection it gives you and your company against lawsuits. So if you go through the process and you are thorough and you are detailed, you are going to have protection for under 12A2. I mean, that's a benefit.
That's really interesting. I hadn't thought about it in those terms.
Yeah, see, you learn something new every day, something that you don't, and that's just it. We're so caught up. Like I was in a panel yesterday or the day before, I don't remember, in another webinar I was invited, and people are complaining that it's so expensive. And I go, expensive to what? That's my question. Expensive to what? Have you ever raised money before? I can tell you it's expensive. But no. The other ones, you just put out the deck. You don't need lawyers. Okay. So what you didn't account for is how many times you met that investor, how many times you took them out for coffee, maybe for a lunch, how many phone calls you made, how many trips you had to go to that hotel, this and that.
How much are you going to pay the lawyer when you get sued?
Okay, I didn't.
I'll tell you what, I'm not a litigator, but I know it's not cheap.
Okay. No, but the point is that we don't associate the soft cost, our time and effort and energy into all that. And when you do, you go, whoa. I get it. I see it. So, okay. So we've talked about the first, you need an opportunity, right? An opportunity, mindful of all that. Then we know you need to go through the Form C filing, which is a regulatory filing that will require the legal guidance and where you need to prepare all your information, which will include financial information that you need to have. So that's 3 out of the 5. And then number 4, obviously, in order to have a successful, or not so much a successful RegCF, to be able to, for your RegCF, is you need marketing. Marketing plays an important role. And this is an area that I think is the game changer when people start saying the cost. And so I'll start with this. I've heard the term, it was used in one of the webinars, they call it investor. So investor/customer. So I heard somebody's coining it. It's very difficult. I don't think it'll work to go through too far, but yeah, I just call them ambassadors. So there is a value. What is the value cost of acquisition to bring a customer in? And now you got a customer and an investor that in the previous models didn't exist. I mean, I have investors in my company today. If I could get them to do a tweet about the investment, they'd be great, but they won't. You get somebody who puts in $100, they're out spreading the word to everyone and great to be involved. So I want to talk a little bit about that. So John, obviously from the portal point of view, the marketing aspect of it, from your understanding, and now that you're a funding portal, how is that going to affect and how are you going to guide companies in this one?
Well, the way I talk about that effect is it's the difference between like a mid-season football game with no money on the line versus a mid-season football game with a little bit of money on the line. Like people just become more invested, more engaged in your platform and hopefully other projects. So you've got crossover pollination between an investor in one project and an investor in the next project. And because we're sort of going after this kind of passionate gamer, kind of nerd, Comic-Con, nerd in the good way kind of crowd, it's an identifiable demographic, right? So we know how to reach out to them on all of the various social media platforms, and hopefully there'll be crossover again, kind of, potential with those investors. And I guess, the closest word for us would be fanvestor, right? Which has been used before. I think there's even a site called Fanvestor out there, but I think it's a good description of at least our typical investor profile for how we think about, our, does that answer your question, Oscar?
It does. You're right. There is a platform. There's a platform you just promoted. It's called Fanvestor.
Yeah.
Under Regulation CF. So Michael Galon, he's going to say a thank you to you. He owes you a little plug in there. So marketing plays a great role. So now let's bring it back to the lawyers. So RegCF, people go, oh, I can market my deal. Let's go to the lawyer now. So we've gone through the audit, now the marketing. Where are the restrictions? What are the boundaries? What are the things that need to be followed to make sure everything's done on side?
Well, even though there are new rules, once you file that Form C, they quickly revert back to the more restrictive rules that apply to CF. So there are two different ways you can communicate. There's what we call a terms, or like a tombstone marketing material, like an ad. So that's just going to have some very basic information that pretty much just says the company's doing an offering and points you toward the intermediary or the platform with a link. And then it can say some basic things like the amount of securities being offered, the price of the securities, the closing date, the nature of the securities. Are you offering at debt, equity? The point of these types of ads is really just to kind of funnel all your potential investors to the platform, because that's the only place where they can buy those shares. You can't have multiple platforms. You can't have them coming through your website. It's not like Reg A. It's very restricted in that way. The other kind of ad, you can still go out and do a regular ad for your products or your services. That hasn't really changed. But if you mention anything about the offering, then you're kind of cutting it close. So on those types of non-terms communications, you can mention there's an offering, you can mention where there's more information, you can link to the platform, but you cannot say any of the terms that I just told you about. You can't say the type of securities that are being offered. You can't say the amount. You can't say the price. You can't say the closing date. And the only thing that is going to change in this respect after March 15th is that on these tombstone type ads, you can also add intended use of proceeds. You can also talk about your fundraising progress, but it's very, very strict, and it's going to continue to be so.
Can you use a visual from the thing that you're raising for? If you're raising money for, like in our case, let's say it's a movie and we've got like a nice big visual. Can you put that description under the visual, and is that considered tombstone, or is that considered?
Depends upon the visual. Anything with an arrow, no. I'm just going to say that. I'm confident that I can say that. But
that's funny.
Especially if the arrow's going up, no. It depends on the visual. I mean, that's it's both a difficult thing and also the brilliant it's kind of ingenious if you think about it in terms of securities law. That's all facts and circumstances. So it's very hard to make a bright line statement. It really is. It's genius, and it's also a pain in the neck.
Ours will probably be like a zombie eating somebody's head or something. It's going to be that kind of stuff.
Are they holding wads of cash or gold bars?
No. I like that. Are they holding, or the gold sparking up? But no, you ask really good questions, and it's really good for everybody here involved to be listening in, because the assumption is I'm going to use regulation crowdfunding. I'm going to tell the world, well, no, you can't. Not the way you think you can. Right. And I know I've been approached on LinkedIn by some, and I go, you need to go back to the portal and make sure they've authorized this, because they do it privately, right? Through private messages. So, and people need to understand the SEC has eyes into everything. I cannot.
Can I tell you a funny conversation we had with FINRA when we were going through the review process? somebody on our team asked them, well, we saw such and such a site that was doing this thing. And they said, yeah, you probably did. And we probably know about it, and they probably shouldn't be doing it. Like just because somebody else is doing it doesn't mean that that's now a new acceptable standard.
It's exactly it. And the best way I describe the SEC compared to other regulators, and that's the beauty of us, because we operate in so many different jurisdictions. The SEC, in my view, just this is my observation, is that they would rather have you do it wrong. They would have you rather do it continuously until you transact. They will wait until the transaction is completed, and they will wait until you close it, and then they'll come after you. In Canada, as soon as you put up the flag, they go, "Oh, no, we put a stop to it," and you still get punished, even though all you were doing was putting up the flag. So it's rather interesting.
Oscar, is that entrapment?
No, it's you. If you follow the
Giving
rules,
you
what
all
you were
the
doing,
rope you need.
yeah, exactly. You hang yourself. So
it's funny,
but okay.
Oscar, I was going to say that sounds very similar to a colleague who's in litigation, who describes the SEC and other other regulators as being kind of like on Wild Kingdom, where you kind of have the wildebeest who's kind of wandered a little too far from the herd, and you got the lions and they're in the tall grass and they're just watching and waiting, and then boom, that's the way they described the regulators. So I can definitely see that. If you're dancing along the edge of the herd, how much of an outlier do you have to be before you attract the wrong kind of attention? I don't know where that line is.
And that's
I don't want to be the test case. I don't want my clients to be the test case.
Oh no, we all don't. But this is why we're having this discussion. We're kind of laughing, of course, having some fun with it, but the reality is that we're not trying to make it onerous on you, but it comes with responsibility. Yes. That responsibility is we need to follow these particular rules to make sure that it's done correctly. The funding portals have rules to follow. They also need to make sure they alert the company to make sure they don't go off the reserve too wild, or monitor their. I mean, this has been happening for decades when broker dealers are working with clients and say, listen, nothing goes out anywhere unless we sign off on it. And it's usually their compliance officer. And we kind of lost that a little bit, but it is well under control. So, but that's item number 4 in our list, which is important. I mean, we've covered. And the 5th one, obviously, we got the opportunity, we got the legals, we got the financials, we obviously working on marketing. We filed, of course, our Form C, we've been qualified. So one question I didn't ask you, Teresa, is that obviously you said that the only place where a company can raise its capital is on a funding portal, but there's actually two locations. But does the company need to know that in advance before they can file the Form C, or can they do that without actually having, knowing which of the platforms the funding portal they're going to use?
Wait a minute. Can you explain to me, there are 2 places?
Oh, you didn't know that, did you?
Well,
I mean, there is, and your law firm is. Yeah. So there is another model that we didn't see it in the 2015 because the dollar amount didn't attract to them. And that is a registered FINRA broker dealer. A registered FINRA broker dealer does not need to register to be a funding portal. All they need to do is allow me, just like a Reg A, instead of having it on my own website, it has to be a controlled environment by the broker dealer, but it's an independent landing page where the investor, all the RegCF rules apply, everything, all the disclosures and all that. And yes, this is the new model. We're going to see 2 different types of RegCF, and your firm is doing 5 of them. So
that must be something I don't know, because last time, I'm sure there's something, if CrowdCheck is doing it, then that's not a model I'm familiar with. I know I couldn't tell you off the top of my head, but I do know the rule says for CF, it has to be a single intermediary, a single place.
Yes, I know. No, you could only have it in one location, but you now have a choice where. you can go to the traditional funding portals like John's.
Okay, that's different.
Okay.
That's different than running a deal from two different places. That's entirely
Correct.
different.
My apologies. Choices
No.
rather than, so the choice has always been funding portal, nothing else. Now it's funding portal or registered broker dealer, who will not have a funding portal, but will create a landing page that will look like a Reg A offering, and it's a RegCF.
Right.
So that model. My apologies.
Right.
But my question was, number one, does a company need to list who they're going to be dealing with before they can file the Form C, or can that come afterwards?
I think you need to know, right? I mean, I don't know how you can write the Form C and explain where you are and what you're going to do. I think you really do need to know that ahead of time.
Okay, no, that's good. So in essence, not only do you need to have the opportunity, you also need to know where you're going to be placing your offering. Why this is important, because I had the order wrong. So the order should be the opportunity you have, the funding portal that you need to, because you also need to know.
More basic than that, even. You need to know what funding portal you're going to be on, because not all portals support all types of deals.
Agreed. Okay.
So,
agreed.
You know, even if I'm wrong about that other part, which is entirely possible, I get stuff wrong all the time. But from a practical perspective, if you've got it, you know, this goes back to knowing what you're going to do. What are you going to offer? Not all funding portals do the same thing. And so you need to know, can they offer what you can they display and function with what your offering plans are. They're not all cut out the same way.
Agreed. And what needs to be clear here, and we have one, is that the regulation, the way it was written, is that the only place that a company can raise its capital is through a registered funding portal, which is registered with FINRA, as John was alluding to. And then, of course, a broker-dealer who's already registered with FINRA. So let's strictly talk about in the funding portal side of it. So obviously, I had the opportunity. I go to you, John. So that's where, are you going to, on the Form C, are you going to take on that burden, or are you going to work with a law firm like CrowdCheck or a law firm to make sure that the client's taken care of? Or what part of the responsibility are you taking or not taking?
I sort of think of it as a hand-holding kind of thing that we're going to go through here.
Okay.
And honestly, we've signed up with a third-party vendor who's going to provide the form, if you will, for that they complete. And I don't know that we've technically signed it yet. So I'm not sure whether that overlaps with your business, Teresa, like if you're a competitor to this company. But I think it might help can I just maybe walk through, hey, how does this all work for just our platform from beginning to end, try to do it here in 3 minutes. So you come to us with a compelling project. We vet the project for its viability. You file a Form C that explains the raise and your company financials, like standard GAAP type reporting, right? Then you post the raise on our platform. We collect, we collect the revenue from, the investments from all the various investors. It's actually handled by a third party escrow agent. So we don't actually touch that money. And then we're paid a fee for what we do out of that raise once you're successful. And then the escrow agent hands that money over to the creator, in our case, who makes the product. You report on the progress as you make that product. And then once your product goes to market, you report on how it's doing, and you collect the money and you pay a transfer agent, which is what Oscar does. So that's how he factors into our specific
Hey, did you just give me a plug in there?
I did.
So, I'm sorry.
Core Connects.
Matter of disclosure, no plug allowed.
The transfer, so it shows up on your books as one line, right? That there's this investment in this project. And then in turn, Oscar is the one that disperses those funds based on the level of investment of each of the investors. So for you on the backside, like it's all managed by a third party. So it's relatively simple on your books. So that's sort of the whole process from beginning to end of how we would work with a project. And maybe I hope that helps a little bit, just orient people like in terms of our platform and where do we fit into the universe.
Yeah, that's perfect, John. No, that's great. That
Okay.
gives it the journey. Look, there's a lot of discussion. I'm going to look. I do enough of these webinars that sometimes every platform gives me a little derailment. The last conversation with Jamie, when she told me that you guys had this RegCF document, I got all excited, and now I have it. And I really look, I'm the type of person that is not going to sugarcoat what's needed. In fact, I'm starting to recognize the industry. We're all starting to recognize that if we don't educate the industry, we can't scale. And why you should pay attention to this part for you, John, is because if we can't scale, means that investors won't come, because there's not going to be any level of trust of people. If people go out there and say, oh yeah, God, anybody can file a Form C and raise $5 million, nobody's watching. Do you think investors want to hear that?
Yeah, I hope I'm not sending that signal.
No, you're not. You're not. No, I'm just saying in general. No, not at all. I'm just saying I've been in webinar and I put a stop to it. Say, hey guys, you know what? You're right. The Form C is simple. It is because your lawyers make it simple. The partners make it simple. But make no mistake, like a lot of them don't realize that you are entering into a database with a securities regulator. Mm-hmm. Teresa said it. Your name is going to be there, and that's a good thing. You're demonstrating that you're a good participant in this capital markets. You have a journey. Today it's RegCF. Maybe tomorrow's Reg D. Maybe it's Reg A plus. Maybe one day it's going public. Maybe one day it's a director. This will have effects in your entire professional life. So, I call it a privilege, not a right. And that's where I'm at right now, because look, I'm an entrepreneur. I make mistakes like anybody else, but if you don't learn and keep making the same mistakes, it's so it was informative. I learned something today I didn't know. And Teresa, that was a great comment. Can you quote that again, where by using a RegCF, you get protection as a company from being sued? What was the section that you quoted? 1802, I believe.
Oh, 12A2.
12A2.
12A2. That's kind of your general anti-fraud provision that basically the standard says, it's called the due diligence defense, and it's really hard. A company probably can't really avail itself of it very often, because basically it says you have to show that you did not know, and in the exercise of reasonable care could not have known of the misstatement or omission, material omission. That's kind of the legal standard. But by going through the document and having a third party, such as your attorney, looking at it, asking questions, fact checking, saying, does this make sense? Looking at your financial statements, it's really helpful to have the reviewed or audited financial statements, because then you have another party, the accountants, looking at it, and everybody's kind of reading it over. Does it make sense? Is it consistent? That's a lot of protection for companies, but, having said all that, and I don't mean to, put a dark cloud over this, if somebody wants to commit fraud,
Well, that's why we all insist. Did you hear that we're making T-shirts? I survived a CrowdCheck due diligence. See, you're laughing. So I'm gonna. This is because if you didn't know this, John, the CrowdCheck due diligence has become an industry standard that broker dealers were utilizing under Reg D. Now it's a standard under Reg A for a lot of the BDs. And you do this for every type of client, whether Reg CF, Reg A, Reg D. It's a standard package. It's included, correct, Lisa? Everyone goes through that.
Well, I think there are different packages. I don't want to go into detail on that, but there are different packages. Reg A's always have the fact checking, but let's put it this way. If I'm looking at something, let's say I'm just taking a quick glance at it. If I see something that is inconsistent or it just doesn't pass the smell test, I'm going to say something, period.
We have to, right? If we don't say it now, I know that this is, like I said, this is a journey now that is going to be, we're going to have a lot of these different discussions. I often wondered in all of this, what we didn't say is the word due diligence. You notice that in Reg A, we go through it, here we don't. I believe we will. I believe in 2021, now that it's going to 5 million, it's going to change our mindset, how we approach it, meaning that we need to ask more, even though the regulators may not require it, but we have to be smart about it because $5 million is a lot of money. And we need to make sure if a platform, look, it only takes one deal to make everything sour very, very quickly. So so I'm looking forward to the journey. This is not one that most entrepreneurs think that it's too overcome, too many people involved and all that, but I believe it's not. So in last words, John, first, I'd like to hear your last words of guidance for anybody looking to doing a RegCF.
I guess scope out what's the right crowdfunding platform for you. There's many different kinds of crowdfunding platforms. I guess first of all, what type of raise do you want to do, right? That would be the first question. CF or Reg A or Reg D or whatever. And then once you've done that, scope out the platforms. And then if you've got an entertainment project and, under $5 million raise and a pathway to profit with the project, and a proven track record and hopefully a social media base or IP that's, there's a level of consumer awareness for it. Please come to us. We'd love to look at it and help to, we've talked a lot about the sort of complexities here, but one of our jobs as a good crowdfunding portal will be to help guide you through that process. That we will hold your hand. We will make sure that you're completing these forms the way you need to, that you are reporting the way you need to. That you're like my big issue, honestly, is Hollywood and the definition of net, and then the waterfall, which in Hollywood is always a little bit overly complicated. It just comes with the territory. You've got multiple investors at different stages, different levels of participation, and my emphasis in all of our contracts with the folks that we're dealing with is complete transparency and over articulating the definition of net and the waterfall to ensure that by the time we get to the back end of this project, that all the investors are clear on where they participate and when and at what level. So we will help walk you through that process and make sure that it's as easy as reasonably possible. But to these guys' points, both Teresa and Oscar here, there's some things that you have to do that you probably weren't doing before you decided to do a crowdfunding raise, and just to be aware of them. And I think it's going to be, there's a lot of learning. Like, I'm not going to deny it, right? Like, I'm not even launched yet. So for me, honestly, these conversations are as educational for me as they are just me describing what we're up to, right? From letting the world know. So I find these hugely helpful, and I really appreciate Oscar inviting me on these conversations.
It's always fun, John. Teresa.
Final words. I hope the 26-page manual didn't scare everyone off. It's really helpful, actually. CrowdCheck is here to help companies and try to keep the process from becoming overwhelming, but at the same time, give you a certain peace of mind to know that you're doing it properly, that you're covered, that you're doing it right. And, following that due diligence document, I know it sounds like a lot from what you've said, Oscar, but if it is logical, and if you just follow it step by step, you're going to have your internal documents organized, and that's always a good thing, getting you ready for, getting through this successfully and then moving on to your next offering. So we're here to help. Pick up the phone. We can help make this as simple as possible.
It's great. Thank you both. And I do agree with you. I think it's important to understand that I joke about how long, but in reality is that this is nothing. RegCF is just starting. And if you're ready for it, welcome to the journey of capital raising to build your business. And if you think there's other easier ways, whenever you think there's a shortcut, there's a bump. And that bump, as Teresa said it, it's one that you may not like because it'll cost you twice as much. There's never any easy roadmap to money. And we're just trying to simplify it for you. And so thank you both once again for a great conversation. John, looking forward to watching you in months ahead or days ahead to launch. March 15th is right around the corner for all of us. We have some exciting discussion points. And thank you to everyone sending in questions. That has helped us create a better program of education. And keep in mind that it's always going to be available at our KoreSummit.io. As well, the speakers, you can find their bios, LinkedIn, email address, so you can reach out to them directly. We will be updating John's email address for Chunky. I really like the other name, but Chunky's good. And of course, you can watch our videos at YouTube Core Connect. Again, have a great week, everyone. Happy equity crowdfunding. We'll talk soon.